Welcome back, everybody. Now, today's going to be a fun video because we're going to see how well my decisions have actually done against the market. And I don't really mean total return because obviously I share my portfolio update with you all every month already. And I let you know about all my buys and sells. But what we don't really do is go back and compare decisions I've made to what actually happened after. So that's what we're going to do today. And what sparked this was a genuine question about why I don't just keep existing positions and DCA into new ones, and bringing the Apple buy and the waste management sell as examples. And to be clear, I have no problem with questions like these. This is the type of stuff we should be talking about on this channel, like different ideas, different thought processes, and then trying to see how they've actually performed. So it got me thinking, how well have my decisions actually done? And believe it or not, buying Apple at the top or selling waste management didn't end up being my worst overall decision. And buying Caterpillar or Valero didn't end up being my best overall decision. And you might be surprised at what the best and worst actually were. So in this video, we're going to define how I measured my best and worst decisions, go over my top 10 worst decisions first, and then my top 10 best decisions, and then we'll break down the lessons that I learned, and there was something that was really interesting that I took away that I'll share at the end. So let's get started. Now, how I measured the best and worst was simply this. How did the stock or ETF perform after I bought or sold it? And what did the general market do after I bought and sold it? And that's because every decision to buy or sell can't just be measured against what happened in that particular stock. It also needs to be compared against the market performance during that same time period, because ultimately my goal is to outperform the market. So I need to know if my decision is contributing to outperformance or underperformance. So for example, if my Nvidia holding has lost 1.78% since I bought it, but the S&P 500 has lost 1.94% during that same time period, then my Nvidia decision is actually a plus 0.16%. Basically, it was a positive decision because it's outpaced the S&P 500 during that time, even though it's technically negative. And then, for example, if I sold or trimmed a stock, and let's just say Walmart, well, since I sold Walmart, the stock is up 13.43%. The S&P 500 during that time is up 9.27%. So my net decision result is a minus 4.16% because holding on to Walmart would have outperformed the market by 4.16% over that time. And now, just to be clear, I am only doing price return and not total return, so that will skew the results a little bit for some stocks, but it made the calculations much easier. So hopefully this all makes sense. And yes, if you're wondering, those are both real examples, but neither one of them made it into my top 10 best or top 10 worst. And all I basically did was run that calculation against every buy and sell that I've done, and then rank the top 10 best results and the top 10 worst results. Now, just for clarity, I did it for every sell or every trim of a stock and in the initial buy of a stock that I made. I didn't do it for buys when I was just adding to an existing holding because there were so many of those transactions and some of them were like one share here or one share there. So I only focused on my initial decision to buy and then any decision to sell or trim. And hopefully that makes sense. And so now that we know the method, let's actually look at the results. And I have to caveat this up front. These things can change very quickly. This is just a point in time view of how the performance is. And just to give you an example, United Health would have been one of my best performers 6 months ago, and now it's one of my worst. So these things change all the time. In a month from now, these numbers could be very different, but it at least gives us a chance to look at where they're at right now. So now that we got that out of the way, let's talk about my top 10 worst decisions first, because I know everybody loves drama. All right, so my top 10 worst decisions so far, we're going to start with number 10, buying SCHD. Now, believe it or not, simply buying SCHD was one of the net worst decisions I made, mostly because it severely underperformed the S&P 500. So here are the stats. I bought SCHD on June 27, 2023 at $71.69 a share, and I sold completely out of it on April 5th, 2024 at $79.05 a share. And that was a 10.27% gain, which on the surface is not too terrible, but the S&P 500 gained 18.86% during that time, which equals a net minus 8.6% result. And I know folks will say, well, you don't buy SCHD to outperform the S&P 500, and I agree with you. That's why it didn't make a lot of sense for me to actually have it in my portfolio. Okay, let's move on to number 9, buying Hershey. Now, here are the stats. I bought Hershey on October 12, 2023 at $187.37 a share. and I sold completely out of it on February 13th, 2024 at $196.46 a share, which was a 4.85% gain, but the S&P 500 gained 13.88% during that time, which equals a net minus 9.02%. And if you're wondering why the numbers are like 0.01% off, it's a rounding thing in my spreadsheet, but you get the idea. Now, obviously, holding a stock like Hershey for the 4 months that I had it isn't really fair in judging its overall performance because over time it may very well outperform, but that's why we're doing this exercise, to see if my decisions are helping or hurting. And in this case, buying Hershey in October and holding it until February was a net negative. Okay, now my number 8 worst decision, buying MSCI. Now, this one's a little unfair because it's so new, but rules are rules. I bought MSCI on February 15, 2024 at $576.49 a share, and it's currently at $526.62 a share, which is an 8.65% loss, while the S&P 500 gained 1.86% during that time, equaling a net minus 10.51% result. Now, it's still early in this one, obviously, but it's been a pretty rough start. Okay, the number 7 worst decision is selling Waste Management. Now, I'm sure some of you thought that this was going to be higher, but let's take a look at the stats. I sold Waste Management on July 26, 2023 at $164.13, and it's currently at $205.37, which was a whopping 25.13% gain, while the S&P 500 gained 12.19% during that same time period, equaling a net minus 12.94% result. So Waste Management definitely outperformed the market during that time, but it was still only the 7th worst decision that I made, and you might be surprised to hear that the 6th worst decision was actually buying Waste Management in the first place. Here are the stats. I bought Waste Management on December 8th, 2022 at $162.01, and then sold it on July 26, 2023 at $164.13, which was only a 1.31% gain, while the S&P 500 gained 18.54% during that time, equaling a net minus 17.24% result. And I know what you're thinking, if I had just held on to Waste Management like I should have, then it would have been okay. And there's no question that holding on to it would have been better, but it still would have been a net negative, with Waste Management returning 26.44% and the S&P 500 returning 29.26%. But still, it's totally fair to say that it would have been a better decision to hold on to it, no question. Okay, so now my top 5 worst decisions. Number 5, trimming American Express. Now, if you remember, I decided to trim some of my American Express position in November of last year, mainly due to the Basel III Endgame stuff, which was a regulatory risk that I think is going to impact Amex's profitability. Well, that turned out to be a pretty bad decision, and here are the stats. I trimmed American Express on November 22nd, 2023 at $164.53 a share. And today it's at $218.20 a share, which is a staggering 32.62% gain, while the S&P 500 gained only 12.44% during that time, equaling a net minus 20.18% result. And now, the only good news is that I kept a majority of my Amex shares, and I didn't sell out of it completely, but more on that later. Still, watching Amex go up 30% after I trimmed it was pretty painful. Okay, now on to number 4. The number 4 worst decision was buying United Health Group. Now, this is crazy because at one point, UNH was one of my best performers, but not anymore. And here are the stats. I bought UNH on June 20th, 2023 at $458.15, and it currently is at $439.20, which is a minus 4.14% loss, while the S&P 500 has gained 16.74% during that time, equaling a net minus 20.88% result. And UNH, again, is a great example of how these numbers are fluid. 6 months ago, it would have probably been the top of the list in terms of performance, and now it's one of my worst decisions. All right, now on to the next. My number 3 worst decision was buying Apple. Now, I know many of you probably thought this would have been number 1, but it's not, which actually might be a little scary. But let's look at the stats. I bought Apple on July 26, 2023 at $194.65 a share, and it's currently at $176.55 a share, which is a minus 9.3% loss, while the S&P 500 gained 12.19% during that time, equaling a net minus 21.49% result. Now, fortunately, I've added to this Apple position a couple of times at lower prices, so I've been able to bring down my cost basis at least a little bit from this initial buy. And we've talked about this one quite a bit, and while I still believe in the company over the long term, it definitely hasn't been a good holding for me, at least yet. Now, the number 2 worst decision was buying Starbucks. Starbucks has basically been a dog since I bought it last year. There's no question about that. And here are the stats. I bought Starbucks on August 28, 2023 at $97.20 a share, and is currently at $84.92 a share, which is a minus 12.63% loss, while the S&P 500 gained 15.57% during that same time period, equaling a net minus 28.20% result. And I really don't have much to say about this other than I'm probably lucky it's been one of my smaller positions. When I bought Starbucks, I recognized that they had some opportunities as it related to operational performance and valuation, but I believed in the core business so much that I was willing to overlook those things, and up to this point at least, it hasn't panned out for me. Okay, now the number 1 worst decision that I've made was buying McDonald's. And now this one hurts my heart. You know it does because I love McDonald's. But at the end of the day, rules are rules, and it's really a story about bad timing. But here are the stats. I bought McDonald's on December 8th, 2022 at $272.92 a share, and it's currently at $267.39 a share, which is a minus 2.03% loss, while the S&P 500 gained a whopping 29.26% during that time, equaling a net minus 31.29% result. Now, this doesn't include when I added more around $245 in October last year, or any of the dividends that I've received from McDonald's over the past 16 months. So my total return is a bit better than this shows. But again, rules are rules, and by the numbers, McDonald's so far has been my worst decision. Now, does that mean that I'm going to get rid of McDonald's? No, of course not. I love McDonald's as a company. I think they're going to perform better in the future, and it's a company that I plan to hold for a very long time. Now, as painful as that was, I did actually make some good decisions, and we're going to get to those next. All right, so my top 10 best decisions so far, and we're going to start with number 10, trimming SCHD, the first time. So I started the year trimming lower growth holdings, and SCHD was one of those. Here are the stats. I trimmed SCHD on January 4th, 2024 at $76.05 a share, and is currently at $76.81 a share, which is technically a 1% gain from where I sold, but the S&P 500 gained 9.27% over that same time period, so SCHD underperformed the market, equaling a net plus 8.27% result. And just to explain this, if it's not clear, I sold a position that underperformed the market, and that's why it was a net positive decision. Hopefully it makes sense. Okay, now moving on to number 9. My number 9 best decision was selling Hershey. Now, I made the decision to sell out of Hershey in February due to the concerns with cocoa prices and their updated forecast for the year. And here are the stats. I sold Hershey on February 13, 2024 at $196.46 a share, and it's currently at $185.80 a share, which is a minus 5.43% loss from where I sold, and the S&P 500 gained 3.44% over that same time, equaling a net plus 8.86% result. Now, again, it's only been 2 months, so this result could change dramatically over time, but up until now, it's looked like a good decision. All right, the number 8 best decision I've made was buying Google. Now, I've only had Google for a couple months, but it's been very good so far. Here are the stats. I bought Google on February 15, 2024 at $141.70 a share, and it's currently at $157.73 a share, which is an 11.31% gain, while the S&P 500 gained just 1.86% over that same time, equaling a net plus 9.45% result. Again, still early, but a good start for Google. So now on to the number 7 best decision, selling Lowe's. Now, depending on how long you've watched my channel, you may not actually remember this one. But back in August of last year, I decided to sell my Lowe's position due to concerns with their outlook and their overall debt. And here are the stats. I sold Lowe on August 22nd, 2023 at $225.32 a share, and it's currently at $232.05 a share, which is a 2.99% gain from where I sold, but the S&P 500 gained 16.77% over that same time period, equaling a net plus 13.78% result. And now obviously Lowe's is a good company that has a very long history of excellent performance, but in this case, at least so far, it looks like that was the right decision. So up next, the number 6 best decision was buying Amazon. Now, we've talked about this one a lot already, but let's look at the stats. I bought Amazon on January 16, 2024 at $152.38 a share, and it's currently at $186.13 a share, which is a 22.15% gain from where I bought. And the S&P 500 gained 7.5% over that same time period, equaling a net 14.65% positive result. And in my opinion, it's just the beginning on that one. Okay. On to number 5. My number 5 best decision that I've made is trimming United Health the second time. Now, I still hold United Health, obviously, because it was one of my top worst decisions, but I've trimmed it twice as well. And here are the stats. I trimmed UNH on February 1st, 2024 at $505.31 a share, and it's currently at $439.20 a share, which is down 13.08% since I sold, and the S&P 500 gained 4.43% over that same time period, equaling a net plus 17.51% result. So clearly, trimming UNH at that point in time turned out to be a very good decision. All right, now we're getting closer to the top here. The number 4 best decision was buying American Express. Now, we've talked about Amex a lot on this channel, and obviously trimming it was one of my worst decisions, which we touched on before. So it makes sense that buying it would probably be one of my best. And here are the stats. I started buying American Express on May 15, 2023 at $148.99 a share, and it's currently at $218.20 a share, which is a whopping 46.45% gain from where I bought, but the S&P 500 also gained 23.87% over that same time period, equaling a net plus 22.59% result. And no matter how you look at those numbers, regardless of if I trimmed or not, they look really good. And now on to the number 3 best decision, which was buying Valero. Now, Valero's been on an insane run over the last couple months and clearly a top performer for me. And here are the stats. I started buying Valero on April 27, 2023 at $113.34 a share, and it's currently at $173.54 a share, which is a 53.11% gain from where I started buying. Now, the S&P 500 gained 23.89% over that same time, equaling a net plus 29.22% result. Now, I did trim Valero a bit recently, but it's still been a great holding. All right, now on to the number 2 best decision that I ever made, and it was buying Caterpillar. Now, I'm guessing some of you thought this would be number 1, but not quite. Still, here are the stats. I bought Caterpillar on November 21st, 2023 at $249.12 a share, and it's currently at $365.63 a share, which is a 46.77% gain from where I bought. Now, the S&P 500 gained 12.90% over that same time, equaling a net plus 33.87% result. Now, Cat was one of those rare times when my research and entry just happened to be timed perfectly, and it's been a really fun ride. Okay, now the number 1 best decision that I've made, believe it or not, was trimming United Health the first time. I first trimmed United Health in October of last year, and I know some folks questioned why I would do that. It turns out it worked out extremely well. And here are the stats. I trimmed United Health on October 6, 2023 at $522.16 a share, and it's currently at $439.20 a share. So it's down 15.89% since I trimmed, and the S&P 500 is up 18.91% over that same time period, equaling a net plus 34.8% result. So even though it might have seemed questionable at the time, it really did turn out to be my best decision. So I'm sure there were some in there that surprised you, because there definitely were for me, but let's talk about some takeaways. Now, while looking at the individual results is fun, what I really wanted to know was the more aggregated information, because at the end of the day, I want to know if my decision making is actually helping me or hurting me in beating the market. And so far, when I summed up the results, it was a minus 7.29%. So slightly negative in terms of the total sum of my decisions. So you might look at that and say, wow, you suck, you should just buy the index. And you may be right about that. But I decided to take a closer look at the results based on when I made the decisions. Since I started this portfolio in December of 2022, it's been about 16 months since. So I split that time in half and I grouped the results based on if they happened in the first half from about December 2022 to August 2023, or in the last half, which was about September 2023 to April 2024. And here's what I found. My decisions in the first 8 months of the portfolio have an aggregated sum of minus 81.48%, which is just a crazy number. But then the decisions that I've made in the last 8 months have an aggregated amount of plus 74.19%. So obviously this is more art than science, but what I took from it was my decisions are getting better over time, and we'll just have to see if that actually continues, but at least for now, it looks promising. And now you might say, but wait a minute, maybe that's just because the market over the past 8 months has been good. But even then, half of my top 10 best decisions were where I either trimmed or completely sold out of a position, and that's in a generally good bull market. So I think it's more than just the market going up over the past 8 months, making my decisions look better. Also, a criticism I hear a lot is that I'm too reactionary or I get in and out of positions too much. And over the long term, that may end up being true. But when I look at this data, it at least tells me that for this short time period, 5 out of my 10 best decisions were trimming or getting out of positions where the story changed for me. And then 7 of my 10 worst decisions were just stocks that I bought. And 5 of those are ones that I'm still holding and I didn't actually sell out of. Plus, McDonald's is my longest holding and also my worst result, based on this method anyway. And I'm not really trying to get out of that one. So it really depends on each individual holding. But at least for now, being willing to trim and sell has led to some of my best decisions. So overall, this was a really interesting exercise for me and probably something I'm going to try to keep up with maybe once every 6 months or so. But let me know what you guys thought about the video. Were there any surprises in there for you? Is this something that you'd like to see me keep up with over time? Let me know down in the comments below. Now, if you want to see the portfolio update that sparked this whole thing, click on this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.